So I get it. Crypto's bleeding, Bitcoin's down, altcoins, so they're getting wrecked. Most investors see red screens and panic. Smart investors, well, they see tax strategy. Because when markets crash, losses aren't just pain. They can become powerful tools to cut your tax bill. And in this video, I'm going to show you how the current crypto crash can potentially save you thousands in taxes if you understand this strategy. Now, when you sell an investment for less than you paid, you create a capital loss. And those losses can offset things like capital gains from other investments, up to $3,000 of ordinary income per year. And excess losses can usually be carried forward indefinitely, at least on federal taxes. But state tax laws and regulations might differ in their ability to do this. So in other words, losses today can potentially reduce your taxes for years. Now, this strategy is often called tax loss harvesting, but it applies differently to crypto than it does for stocks, ETFs, and mutual funds. So why does crypto have a unique advantage right now? Well, here's the twist. Most investors don't know that stocks and ETFs are subject to what they call the wash sale rule. Now, this rule states that if you sell at a loss and you buy back the same or essentially the same investment within 30 days, the IRS disallows that loss. So if you sell your S&P 500 ETF and buy back the same or even a different S&P 500 ETF, you run afoul of the rule and you can't take the loss. Crypto ETFs work the same way. If you hold a Bitcoin ETF and try this strategy, that wash sale rule applies. If you sell it and then buy it back within 30 days, the loss disappears. So you don't get the tax deduction. Now, maybe you could buy back a diversified crypto index ETF that also has Bitcoin in it and not trigger that wash sale rule, but you couldn't buy a Bitcoin-only ETF. But cryptocurrency, it's currently classified as property, not a security. So under today's tax law, the wash sale rule is not explicitly applied to crypto. This is why direct crypto ownership offers more flexibility during crashes. This means that many investors are able to sell crypto during market drops, lock in the tax loss, and then reestablish a position immediately, maintaining market exposure to their crypto while capturing the deduction. This tax loophole may not last forever, but right now, it's one of the most powerful tools available in volatile markets. So here's a real-world example. Let's say you bought Bitcoin at $100,000 and it drops to $80,000. You now have $20,000 of unrealized losses. If you do nothing, there's no tax benefit. But if you strategically sell and realize that loss, it can offset $20,000 of gains elsewhere in your portfolio, or it can reduce your income over multiple years by that $3,000 per year. And the best part is if you love that crypto's narrative, you can potentially re-enter the position immediately. So you still own Bitcoin, but now you've created a tax deduction for very little effort. Essentially, direct crypto ownership gives you the best of both worlds. So now here's some important things to consider. This strategy isn't about day trading. It's not about gaming the system. You still need proper records, understanding your tax bracket, and to be aware that tax laws may change. But when used correctly, tax loss harvesting in the crypto world has the potential to dramatically improve after-tax returns. So here's my final take. Yes, market crashes feel terrible, but tax laws can quietly reward disciplined investors who understand how strategically making losses work to their benefit can help their overall situation. Remember, panic creates pain, strategy creates opportunities. So are we in a crypto winter, or will things turn around quickly? Who really knows? But if you own a significant amount of crypto and are temporarily at a loss, this downturn could be one of the best tax planning strategies and opportunities that you'll have this year. This is Steve Borstein, and I'm a certified financial planner practitioner. If you like this video, please consider giving a thumbs up, subscribing, commenting. Thanks so much, and I'll see you in the next one.